Gentlemen, Parkway Life Reit made its maiden acquisition of 11 nursing homes in France. Well, it's quite alarming to me because 1, it's European assets. 2, why at this time? And 3, does it necessarily mean that it will divert management attention from its proposed acquisition that you talk about on Mount E Novena, which is by far a much better acquisition? In this week's video, we're going to delve into that deep. Do let me know what your opinions are nonetheless, so that we can learn from each other. Now, if you peruse further in its structural trend in France's nursing sector, look no further, ladies and gentlemen, because the chart seems to imply that the top 3 players, that's Operator E, Operator F, and DOMUS VI, which is the partner that Parkway Life Reit is partnering in, because they are buying the assets from them, are dominating the market. Does it necessarily mean that they have the proclivity and the ability to raise rates much higher than compared to other competitors? Does it mean that in France's nursing sector, the dominant or the monopoly player will actually benefit from that? But more importantly, if you look further into this, this is something that I don't like about real estate investment trust, ladies and gentlemen. That is, they tell you Operator E, Operator F. So who the hell are Operator E and Operator F? Operator A, Operator B, Operator C, Operator D is listed and sit there. If you are presenting presentation materials of informative value to propose share to your shareholders, don't you think that you should be giving more and detailed information? More so if it's a market in France where many Singaporean investors or Asian investors, as a matter of fact, doesn't know much about. Well, let me know my opinion in the video alone. The latest report by some of the consulting firms, and the one notable one is actually from Cushman & Wakefield, which is the leading real estate firm in Europe. And what have they got to say in their latest report with respect to operating landscape, in the France sector, nursing home sector, is this. Based on the most recent statistics, France counts around 7,350 nursing and care homes, providing a total capacity of approximately 600,000 beds. Now, they mentioned that the top, although it is a competitive market, there are 3 names. One is Clarion. Number 2 is DOMUS VI, the 6 rather, for which Parkway is tying up with, and Emeis. And put in a bracket, approximately 40% of the for-profit nursing homes supply in France. Public operators account for approximately 45%. So, now, bear in mind, ladies and gentlemen, this named Emeis. Okay, if you search on the internet, you notice that, hey, Emeis used to be called Orpea, O-R-P-E-A. Now, let me just read you another industry report before I delve into the origins of Orpea, its key competitor, because remember, it's top 3. So, DOMUS VI will be dictated and to a large extent influenced by how Orpea has performed previously, right? So if you look at the latest report by Cevis, it mentioned that governments across the world are grappling with the challenges of aging populations. And the model for nursing in key European countries like France, Germany, Netherlands, and Belgium have insurance-based model, for which Parkway Life have actually shown that their acquisition is such, and that's why they are optimistic about it. But really, as a Parkway shareholder, if you are, or a potential Parkway shareholder, should you be optimistic on this? Okay, now let me read further to tell you that social care funded by insurance-based systems can be vulnerable. Let me repeat, vulnerable to the changing state of the national government. And the current government is led by President Macron. However, lower than expected insurance contribution or higher than expected long-term care needs may leave funds facing financial problems. homes. So does it mean that effectively, while the current nursing home is insurance-based, that proportion that Parkway have shown, together with DOMUS VI, can change easily? Well, does it mean, therefore, you, the Parkway shareholder, would potentially be faced or suddenly with a lot of problems later on? Okay, now let's delve further into Orpas. Okay, now less than 2 years ago, I'm shocked really, one of the reasons why I'm shocked is that Parkway Life has actually entered into this deal, because if you have been a regular visitor to France, and ladies and gentlemen, yes, we have been a regular visitor to France because me and my wife, we owned LVMH shares, we owned the likes of good names, like Essilor, Luxottica, or L'Oreal, and of course, our top stock is actually Emeis, and every year we go and visit our stores, we do our active research there, we actually talk to many of the detailed research and visit the various maisons. For example, if you're a shareholder of LVMH Club, you can actually visit, the Moet and Chandon maisons. You can actually go for a drink of Dom Perignon at its premise, and it's free, ladies and gentlemen. Yes, do join us for the LVMH club, if you want. Now so if you have been in France, and we have been doing that for the last decade, if you mention the word Orpas, I think many of the French will just spit at the name. Why? Because 2 years ago, as you can see from this report by Etui, one of the French renowned publication, it says nursing home group Orpas is at the center of another scandal. Now, let me just read that same report for you, okay, for you to understand, why many French people will throw saliva, at the name of Orpas. That's why they have to change their name to call Emeis right now. Okay. Now, it's up to 2 years ago, Orpas is a leading global player in this French nursing home. They run a network of 1,156 establishments, offering more than 100,000 beds in 23 countries, like almost a dominant monopoly player. Okay, now you notice that let me just read out the underlying one. Orpas management methods have been the subject of regular scandal in France since 2014. Hey, wait a minute, I thought this report was in 2022, the E3 report. Yes, it is. Okay, this means that they have been the subject of scandal since 2014. That is 8 years. Yes, ladies and gentlemen. Okay, now let me read the next paragraph to you. And this scandal was actually revealed by this investigative journalist, Mr. Victor Castanet, in his book, The Grave Diggers, or in France, it's called Les Vassieurs. Right? And it was published, and it is based on an investigation of 250 testimonies, from people who have suffered, under Orpas. He exposes the system developed by Orpas to maximize profits. Now, remember, this is a nursing home trying to maximize profits and pay dividends to the shareholders. So, the operator like DOMUS V will actually be in the same position. I'm not saying that DOMUS V is actually exploiting. We don't hold any positions in Parkway Life. In fact, for those of us who attend the GCP Global Investment classes, yes, we conduct REIT classes every quarterly for the last 35 years. In fact, if you look at the chart, you notice that, and for those who have followed us, that is actually many of the index fund managers of real estate investment trusts, the family offices, as well as basically many of the high net worth individuals. We have told you in class 2 years ago that we are out of Parkway Life Reit at $5 or more. Henceforth, the share price, as you can see from the chart, is actually down 25%. Now, if you look at our entry price, it was below $3 from the circle that we have shown. You notice that, we told you in class that maybe if it gets back to below $3 level, which we entered the last time around and made a tremendous amount of money, then we may consider going in, But let's look at the deal per se and see whether it is as attractive as it is. Now, when I first looked at the deal, I found quite puzzling. I wouldn't say a lot, but a couple of details are actually missing. And actually, I reached out to the company. And as you can see, ladies and gentlemen, the company didn't reply at all. Then on Tuesday, I actually reached out to the PR, the IR of the company. They say that they were reverting to management. And the CFO has actually written back and said that, well, they are scheduling and they asked me to actually wait until November. Hey, hello, these are important details. And essentially we have already told you that essentially we're coming up with a video on Parkway Life, for which, important details are missing, which I think is very important for investors. Because if you are the shareholder of Parkway Life, it is crucial to know all these important factors before we even delve further into whether to take up the placement. Buy if the placement of institutional placement is at 380, but if it drops, say, to 360, would you be buying? If you need to buy, you need to know a couple of details. So let's delve into this in detail. It will remain a critical part of Parkway Life growth. Now, this is shocking to me, ladies and gentlemen. For those who have read my book, there's one of the key things that we actually like Parkway is because they are able to deliver steady growth in DPU over the last decade. And guess what? This steady growth in DPU is because of not dramatic acquisitions that are actually being done. For example, by other REITs, like for example, Mapletree Logistics Trust, expanding from less than 3 countries to 10 countries, and see how the share prices perform. Now in this case, Parkway Life now seems to be changing its profile. Is it for the better? Now you can see, ladies and gentlemen, that if all the 11 nursing homes are all across France. Now, where are they located? Are there any in Paris? No. Are they in Marseille? No. Where are they in? Are they actually in Dijon? No. Are they in Lyon, which is the second biggest city? No. So where are they about? Well, they are in places like Nouvelle-Aquitaine, Occitanie, Grand Est, and a few others. This begs the question, ladies and gentlemen, very similar REIT was. When it went for IPO, we told our investors that, hey, those properties, 38 or 35, though it may be, are all outside London. As you know, if you live in London, the prices in London versus, say, Peterborough or, say, Ipswich, or even going down to Wales and Cardiff, miles apart. Have little chance of appreciating, in my opinion. In fact, there's even a greater chance of depreciating as time goes on, particularly if the euro, will continue to be a nagging factor, right? There's another thing that's missing. When you buy properties, be it your condo, your HDB, a landed property, the first thing you look for, ladies and gentlemen, is yield, right? So if you look at the pronouncement on its date of acquisition of 22nd of October by Parkway Life, I searched high and low until, some of my hair actually dropped, to actually look for this important variable. And that is the NPI yield or EBITDA yield, So essentially, in fact, if you look at its press releases, presentation materials, this detail is missing. And I'm surprised, that the company releases, their presentation materials without actually having this. But if I may just help you to work out this number, since, this is very lacking. And one of the premise why we are doing this video, is because we actually save a lot of funds, individual investors, from losing a lot of money in the likes of elite commercial trusts when they went listing, a lot of the foreign listed REITs, particularly the US office REITs. The three things that I actually find very alarming is that at the point of acquisition or at the point of IPO, very few people does a detailed analysis into such acquisition. And actually that holds the key to whether you can make money in REITs, as what I've said in my book, Making a Millions in Real Estate Investment Trust. Because if you actually land into a wrong deal or walk into a landmine, no matter how good the REIT is, no matter how low the price you pay, you are actually in for a rut. And psychologically, when you have bad news coming on one after another and the share price is dropping, sometimes you'll be so dazzled as to what actually hit you. That's why at GCP Global, for the last 35 years, we hold quarterly investment classes to guide you, So the next one, if you'd like to, is actually on 8th of February. So do sign up at our GCP Global website. So let's look further, ladies and gentlemen. In its presentation materials, Parkway Life mentioned that its purchase price is 159.9. So if you look further, they say that essentially the DPU, based on its half year, works out to 7.64 adjusted basis. Okay, so what I did is that I actually look further, and do further research, and looking at the latest report from Cushman and Wakefield, let me just read this out to you. This is their latest report for 2024. It mentioned that in France, the healthcare market is subject to repricing, although the increase in yield has been limited compared to other markets. So what they are trying to say is that the logistics or the office market is a much better market than the nursing home market because pricing power is limited. Okay. Now in 2023, the prime yield for nursing homes reached 4.75, but it's lower for properties in Paris. But remember Parkway Life Reit? All their properties are not even in Marseille, Lyon, Dijon, or Paris. So does it mean that the yield may have to go up to 5.5% to suggest a fair yield, an NPI yield of 5.5%? Well, let's look at the numbers. Okay, they guided that essentially the equivalent, and that is based on a DPU of 7.54, right? So the implied distribution yield, if they are guiding the market for the acquisition of the 11 French home, is that DPU on an adjusted basis is going to go up to 7.64. This means that the implied distribution income for the first half of this year, based on the presentation material, is 49.8. This is the numbers that I work out, which means that the income from the France assets, based on their guidance of the two DPU from the presentation materials by Parkway Life, is 4.2 million for half a year. So if you adjust for two halves of the year normalized, you're getting like close to 8 million. Now this works out to the NPI yield on purchase price at 5.2%. But really, ladies and gentlemen, in my last slide, I showed to you that, when a REIT make expensive acquisition, not only do shareholders suffer, in little margin of safety for the properties. Secondly, they do not know much about the properties, so they are relying a lot on the presentation materials that the REITs actually dish out. So in Parkway's Life case, they mentioned that professional fee and expenses, as well as fundraising will actually cost them 20.1 million. They also forgot to tell you that, actually, they are being paid 1.6 million for the deal. So if you total up, ladies and gentlemen, 159.9 million, 20.1 million adds up to 180, plus Parkway management fee, for which they say they will take in units, 1.6 million. The total cost for the shareholder is 181.6 million, not 159, So if you work out on the cost per shareholder for this acquisition, that means if you take total cost of 181.6 million divided by 159.9, you're getting a 14%, ladies and gentlemen, cost of acquisition. How expensive it is, ladies and gentlemen? Let me know in the comments below. Okay? Now, so if you go back, ladies and gentlemen, then the NPI yield, therefore, based on total cost for shareholders, right? Based on the total cost of 181.6 million, actually only works out to 4.66%. You'll be thinking, alamak, it's actually a very low yield, almost 1% below the current market. You'll be thinking, when the market is actually favoring buyers, why is Parkway Life not getting a better deal than this? Let me know of it in your comments below. How and to what extent Parkway Life could have improved on this particular deal. Once again, ladies and gentlemen, we have been quoted before, and in our Business Times interview, for example, in 17th of March 2022, the same time where the Orpas scandal actually erupted, we always like to focus in detail on return on investment capital, EV/EBITDA, in evaluating REIT mergers and acquisition. And true enough, ladies and gentlemen, if you come to our classes, we are going to show you ROIC and EV/EBITDA numbers for Parkway's acquisition compared to the others. Yes, of course, we also will be looking at EV/EBITDA as well as actually ROIC understanding of, for example, some of the luxury companies that we are invested in. For example, carrying acquisition of 33% of Valentino, as well as essentially some of the latest acquisition of Gautama by L'Oreal, whether it's actually effectively adding to that. Now, you notice that in the last decade, Parkway Life has basically gone up like double, but if you look at the likes of others, like, Emeis, LVMH, when we were shareholders, we bought in like 1/7 the price of what it was 10 years ago. And that's why, ladies and gentlemen, we're also doing a class on luxury stocks, so we talk about names like LVMH, Hermes, L'Oreal, EssilorLuxottica, Richemont, which owns Cartier, as well as Appel's, the jewelry, as well as essentially Swatch Group, for example. So do look up, do send us an email if you would like to attend this luxury goods class, for next year. So once again, hope you enjoyed this week's video. Let me know what you think about this deal, because it is an alarming deal. The reason why we're actually doing this video is because we really want to save you, from actually warn you about REITs doing potentially, diluting deals in their view, which may have impact, to your happiness, in the future. Because we think that as avid REIT investors, we should just be buying it, keeping it, waiting for good capital appreciation and getting steady returns. We don't want to be boggled down with a lot of problems that's coming up from new markets. And mind you, ladies and gentlemen, France, even though we go there every year, we can tell you that it's a hotbed of problems from strikes, revolt, problems of mini terrorism, Now all this affect share prices. So do you want to put yourself in this position where you're vulnerable just because your REIT owns such assets? Let me know what you think below. And like it or not, ladies and gentlemen, do subscribe to the video for more incisive, detailed analysis of real estate investment trusts as well as luxury stocks, or as a matter of fact, pharmaceutical or healthcare stocks. Cheers once again.